Hey traders, welcome back to the Forex Muse. Today, we're tackling a monster that haunts every Forex trader at some point. FOMO, fear of missing out. Picture this, you're staring at your charts, and suddenly, a currency pair starts rocketing upward. Your heart races, your palms sweat, and that little voice in your head screams, "Get in now, or you'll miss it forever." Sound familiar? If you've ever felt that urge or acted on it and regretted it, this video is for you. FOMO is one of the sneakiest psychological traps in trading, and it can derail even the best strategies. But here's the good news. By the end of this video, you'll understand why FOMO hits so hard and how to fight back. Let's dive in and master your trading psychology today. So, what's FOMO all about? At its core, FOMO is the assumption that this trade, this one, right here, is your only shot at success. It's that gut-wrenching fear that if you don't jump in immediately, you'll never see another opportunity like it. But here's the twist. Deep down, you know that's not true. The Forex market is open 24 hours a day, 5 days a week. Opportunities are everywhere. Yet when FOMO kicks in, all that logic flies out the window and you're left chasing trades like a kid running after an ice cream truck. In Forex, this is amplified by the market's speed and leverage. A small move can mean big profits or big losses, and that pressure makes FOMO feel like a life or death decision. Why does FOMO hit us so hard? It's not just about missing a trade, it's about missing out on winning. Humans are wired to avoid regret. The idea of looking back and thinking I could have made a killing if I just acted is torture. Add in the Forex world's constant noise, social media posts bragging about gains, group chats buzzing with hot tips, trading forums lighting up, and it's like FOMO on steroids. You see others cashing in, and suddenly you're not just trading, you're competing. But here's a question to chew on. Are you trading to prove something to yourself or to the market? Because the market doesn't care about your ego, and FOMO thrives on that emotional tug of war. Let's make this real with a couple of traders I'll call John and Sarah. John's scrolling Twitter one day when he sees everyone hyping a breakout on GBP JPY. The chart's climbing fast and FOMO takes over. He jumps in, no plan, no confirmation, just pure adrenaline. 5 minutes later, the market reverses and John's down 50 pips, kicking himself for not sticking to his rules. Now meet Sarah. She sees the same breakout, feels the same itch, but pauses. She checks her strategy, sees it doesn't fit, and sits it out. 2 days later, she nails a textbook setup on GBP JPY and walks away with a solid win. John chased the hype, Sarah trusted her process. Which one sounds more like you? This is where it gets interesting. You know there will be more opportunities. The Forex market is a non-stop machine churning out setups every day. Logically, you get that missing one trade isn't the end of the world. But when FOMO strikes, it's like your brain hits the mute button on logic. That voice pipes up. This is the big one, your only shot. And before you know it, you're clicking buy or sell without a second thought. It's a battle between what you know and what you feel. And in trading, letting feelings win can cost you more than just pips. Have you ever caught yourself in that moment? Maybe you've chased a trade because it looked good, only to watch it tank right after you entered. Or maybe you've hesitated, second-guessed, and then regretted not acting, only to realize later it was a bullet dodged. Where does FOMO show up for you? Recognizing it is the first step to beating it, so think about your last impulsive move. What drove it? Let's figure this out together. All right, let's get to the good stuff. How do you take control of FOMO? Here are 4 strategies to keep it in check. 1. Build a rock-solid trading plan. Your plan is your anchor. Define your entry signals, exit points, and risk limits, then stick to them like glue. If a trade doesn't match your criteria, it's not your trade. No exceptions. 2. Train yourself to be patient. Patience is a superpower in Forex. Try setting boundaries, like only trading your favorite pairs or sticking to specific time frames. Remind yourself daily, the market's not going anywhere. Missing a move isn't failure, it's discipline. 3. Tune out the noise. Social media and trading forums can fuel FOMO like gasoline on a fire. Limit your scrolling. Maybe check them once a day, not mid-session. Focus on your charts, not someone else's wins. 4. Journal your emotions. Grab a notebook or app and track your trades and your feelings. When FOMO hits, jot it down. What triggered it? How did you react? Over time, you'll spot patterns and learn to pause before you pounce. Here's a little mindset hack to tie it all together. FOMO comes from a scarcity mindset, thinking opportunities are rare. But Forex, it's an abundance playground. Every dip, every spike, it's all part of the game. Imagine the market as an ocean. One wave might pass, but another's always coming. Your job isn't to ride every wave. It's to catch the ones that fit your surfboard. Protecting your capital by skipping bad trades is a win in itself. Shift from chasing to choosing, and FOMO loses its grip. FOMO is a beast, but it's not unbeatable. It's that assumption that this is your only chance when you know full well there's more to come. The trick is keeping that logic front and center when emotions try to hijack your trades. With a solid plan, patience, and self-awareness, you can turn FOMO from a foe into a signal to slow down and think. The market's not going anywhere, and neither should your hard-earned capital. Thanks for watching. If this hit home, smash that like button and subscribe for more trading psychology gold. Drop a comment below. What's your FOMO story? Let's learn from each other. Until next time, trade smart and stay in control.